Hello, everyone. Thank you for joining this session. You might be aware that network just experienced the 11th largest downward difficulty adjustment in the history. Like, if we will go through this article from Blockbeats, I hope it will be visible. Otherwise, I'm just gonna increase the size of the font. So here, the Bitcoin mining difficulty was reduced by 10% in a single transaction. If you will see in the mempool space, you will also able to see just recently in the previous, the difficulty was dropped around 10%. So is this the first time it is happening, or earlier also it has happened a lot? Because people are thinking that because in the recent months, people have not seen the single drop, two-digit single drop, because generally it will happen single digit. So we will see the previous history because this article covers the whole history since the starting, how many downward adjustment has been happened in the Bitcoin network ecosystem. And we will also see rank wise when these thing has happened. So if you will go below, in that the credit goes to the Galaxy Research. The same screenshot you will also find it on their X handle. So if you will see this, I hope this is visible. Otherwise, I will just, yes, I hope this is visible now. So the recent downward difficulty adjustment is not the largest downward difficulty adjustment, because if you will compare with other dates, that time difficulty adjustment happened a lot. Like if you will see in the rank one during July 2021, the difficulty change happened more than 25%. This is a lot. Like 25% means 27.94% is huge. So when it has happened, when in 2021, China completely banned all the Bitcoin mining overnight. So that time itself, because suddenly all the miners which were running in China, they have to stop doing those operations. Because of that, 3rd July 2021 was the largest downward difficulty adjustment till now. Even if you will see in rank 2, that is when the first big price crash happened during October 2011, that bear market. That time itself, the difficulty got adjusted about 18.03%. So these are the top 25 downward adjustment which has happened in the Bitcoin ecosystem. And because of this, if you will see the recent one, which comes in the 11th rank at the moment, if you will see, there are certain movement which has happened, that time difficulty change, and this might be bad for the person who is not mining, but think like this, like if you are running it or you are mining it, then this is the best time, because right now the difficulty got reduced, so the chances of mining a solo block is increased by 10.09%, which is okay. Like 3 days ago, your chances was less. Now you have more than 10% chances now. So for solo miner, it is always better. Now you might be thinking, okay, why this thing has happened because okay, in rank one we can easily relate that when China mining ban happened, that time all the miners who were running from China, they have to stop doing the operation. And that's why this happened. But why in June 14, 2026, that thing has happened? So if you will read the whole thing uh, here, so you will get to know that you might be aware of all those AI companies and memory chip pricing. Like if I want to show you, I can show maybe one of them. So what is happening in the US market right now, you can also get a little bit understanding. You might be thinking, okay, this is the Sandix Corporation, and today they are 1.12% loss. But if you will see the 1 year, I'm not talking about 5 year or 10 year. I'm just talking about 1 year. If just 1 year, a few months, even not fully 1 year, if you will see, even if you or any company have poured their money on this or all those similar stocks, like if you, same thing you will see for Nvidia, same thing you will see for Micron. You can you see the jump? The jump is 4,599%. So what is happening right now? Because we are supporting Bitcoin ecosystem because we love Bitcoin. But sometimes this is not the case with the companies because company always look for the profit. And even if you look for the link, so I have added some links here which we can see that. So this we have already seen. And now we will see the mining report. Based on that, you will get a better idea why this thing is happening these days. So CoinShare always generate a Bitcoin mining report in every quarter. So even if you want to see the previous quarter, you can go ahead and read those reports. Those are not big uh, 26, 28 page documents. No, for that, maybe you have to read the papers. But in this report, these are the summary you will find it out. So during April, they have released this. And why we are covering this? Because focus on average pricing. So it should be somewhere. So yes, can you see they have calculated the average cost, and that we are talking about during quarter one, means from Jan to March, April duration, because the next report would come after a few months. So in that, if you will see in public listed miners, if they are mining, they have to spend something around $79,000. That is the average mining cost per BTC, which is huge because right now, if you will see the Bitcoin pricing, that is moving below the pricing. Okay, if you will go to any website, it is in $65,000, right? It is moving from 65 to 75, then 65, 67, right? So what I'm trying to convey here, if you read the whole report, then you will get to know that the average cost which is coming for all those miners, so they have uh, taken the production for all the big companies like Hive, Iron. These are the companies who mine the Bitcoin. They have the huge setup for Bitcoin mining. Bitdeer, Cypher, all those companies, they have calculated the production, and also once they came up with the average cash cost, it was coming around 79. Now you might be thinking, okay, if it is 79 and right now the BTC price itself is 65, why still companies are mining? Because this is not same for all the companies. Why? Because some companies may be using the old miners. In that, you will not get higher efficiency. Think like this. Maybe BitDeer started in 2022. They purchased some miners. And since then, they are running those miners. Maybe the miners are older and the joule per terahash efficiency is also very less. That's why some of the old miners, they are pausing it at the moment because of this the price fluctuation, and they are not running in full speed. So that is the one thing. Even because of this, you will keep seeing the data center revenue is also dropping for mining. So the black is for mining in this report. If you will see, sorry, anyone has anything to ask, or we can continue? Sure. So here, these things is keep reducing, okay? Because the miners, the old miners which they are running, and those miners are not efficient enough, that joule per terahash which they are offering is not enough, then the cost will always be more than 75 to $78,000 to mint a Bitcoin. So it's better to purchase a Bitcoin for those miners instead of doing the mining. So that's why most of the hash rate drop is already happening, and it is keep happening these days. As we discussed for other like SanDisk share price and others, they are focusing more of the energy, because most of the company which we discussed, even if you will see for BitDeer, I should have the link for their recent post. So let me see if yeah, network hash rate is also going down, which we have seen. Okay, so now we will see the BitDeer holding for the BTC is zero, means they have sold all the BTC holding which they mine using their miners. Only they have few, because the customer deposit which we already have with the BitDeer, they have it, but all the savings or earning which they had, they already sold it out, and they are pivoting towards AI at the moment. Because BitDeer, if you might be aware of BitDeer, they are also running some customized miners. So they have Bitcoin miners, but those are not efficient enough. If you will see the efficiency is not that great as we compare with Ant miner. So the problem is here, the miner which has the highest efficiency will only win the mining game at the moment, because the drop is happening, and to mine a block at the moment is costly as compared to the current Bitcoin price. So BitDeer has already stopped their Bitcoin mining infrastructure and mostly focusing on this high performance computing cloud solutions. That's why you see this much drop, which is the 11th largest downward difficulty adjustment has happened just 2 days ago. But this is really a good thing for us, because think like this. Now, I can give you an example. Maybe most of you might have played games like Mario. If I would say If you will play a video game today, maybe it will be 10% easier to win the game. Instead, if you were playing it few days ago, and rewards is exactly the same. And that is what has happened on June 14th. So if you will see, because of the recent price drop, some of the giant like BitDeer, as I have shown you, those expensive mining firms which were not having enough efficient mining joule per terahash, they have already stopped contributing to the Bitcoin network, and that Bitcoin network automatically adjusted to 10.09% easier to mine. So for anyone which is keeping their machine running right now, your chances of hitting a block just jumped by 10.09% or 11%, which is the easy mode, I can say, because people were always complaining that earlier it was not that, like people were saying, I have met with many people, they were saying, okay, it's very hard to mine a Bitcoin. I would rather go for Bitcoin Cash and all those things. But if these things will keep dropping because of this recent price dip, and after that the expensive mining farms which they needs to stop and turn off their older machines, because if you will see BitDeer, they are doing Bitcoin mining since long. Like they are into the Bitcoin mining industry since 2018. So many miners they have purchased during 2018 to 2020. Those are not efficient enough at the moment, which can make them profitable. So they have to pivot. Right now, this is what is happening in the market, and that's why all those Bitcoin mining infrastructure company are stopping old miners and only running the miners which have global efficiency above like 30 joule per terahash, or around like maybe 23 joule per terahash this way. So yes, if anyone has any doubts in between, please feel free to ping or ask question or interrupt me at the moment. Okay. So we have seen the difficulty adjustment. This is not the largest one. We have seen many largest earlier. The single day drop, which was the highest one, is 28%. Right now we are not even half of that. Okay, I think this link is not opening. No issues. But we have seen the big deer status here, in that uh, they they itself has covered that now they don't own any BTC at the moment. So all those pure holdings which BitDeer has, they have already sold it out. Now we have seen and discussed what has happened in few days and why this adjustment has happened in just one day. Now there are some updates, some good updates from the company. So let me see if I can open. Okay, so Femex is not working for me, but let me see if it is opening. I can try it again, because there was an update from Canon. Mm, not this one. Okay, I'm not sure why those website is not opening for me. I think there might be some issue on Brave, because my other laptop, those were opening, but no issues. I can cover it here. So I hope my notepad is visible. So what has happened from Canon side, that they have mined. Okay, let me increase the font for here. Mined 90 BTC recently using self mining. Now, you may think that Bitdeer is reducing their holdings for BTC. They have recently sold around 195 BTC uh, in June 12, and right now they are just maintaining zero BTC treasury at the moment. While Canon and all those companies are still doing the self mining and also uh, providing this tool for other solo customers. Even they are mining in North America, like if you will see. Why? Because of efficiency. Because BitDeer was using all those old models which were not efficient enough, but Canon has released some of the miners at the moment. And if I will talk about the efficiency, which is 17.9 joule per terahash, this is very good. Means you might not be aware, like generally the efficiency in global would be around 30 to 35 joule per terahash. Uh, in North America, it would be little less because of the weather and the temperature. But this 17.9 joule per terahash itself is improvement from previous generation. Like if we'll calculate the improvement, it would be something around 10% or 11% roughly. And the global efficiency which they quoted is around 23.7 joule per terahash, which is also good enough. Like if you will compare it for other older Bitcoin miners, from that it is around 13 to 14% jump. Means even if the Bitcoin price drop by 13-14%, then you will be also able to earn the same thing using those latest Canon miners. And right now, Canon are using this. And even in May 2026, just last month, they have released the report in June 11th. This is the link. I will share it later. I'm not sure why this is not opening for me. But in that, they have mined 1990 BTC and 24 BTC was mined from their customer side because of the high efficient miner. So all those companies which are using the latest miners will be keep doing the mining, but the older devices will get replaced or removed, or the company will pivot like the Bitdeer. They are planning to pivot fully. That's why more or the even they have stopped manufacturing the miners at the moment. If you will see more, they are focusing more on the GPU and the high performance computing because they are seeing those things getting increased. But one thing I would like to say, like people might be thinking because of the demand, these prices are going so high. But based on my understanding, I'm not sure how much of you are following the China tech. So what has happened? There are only three companies at the moment: SanDisk, Samsung, and Hynix. So those are the memory companies who are ruling the market. But now there are few Chinese companies which are coming because this hype will not be there always, which you are seeing it right now. Because right now every company is building their data center. But once the data center is set up, it is not an ongoing process. It is a one-time investment. Then they will start working on it since long. So the hype which we are seeing it for the memory or the high performance memory will not be there so long. Even in SanDisk, like one of my colleagues is working for SanDisk, in that they have mentioned like the market, like this price or the, if you will see the revenue, 80% revenue is not coming from the high performance memory or HPM. They are coming from the hard disk. Like people are not aware of it. Why? Because all the companies want to store more and more data, and instead of going for high bandwidth memory, they are going with hard disk where they can store those things. And once they have the AI, then they may able to do that. And the second thing, maybe right now you might be thinking there are only three companies who are making RAM and all those memory chips, but there are few other companies which have already started manufacturing it. So I am hoping once they will come into the market, these things should go down. That is my assumption. I'm not sure, but definitely you can also share your opinion. What do you feel? But this is my assumption at the moment because right now there are not so many players. What they are doing is they are having, if you will read their quarterly result and the report, you will get to know they are currently having 74% of profit. Like if they are selling one chip, the operating margin and the profit is something around 70 to 74%. It will not be sustainable for so long, but let's see what will happen. So now I will move back here. We have covered for Canon, even the previous thing, and there are some events are also going on in Miami. Like all those companies are joining, all those industry are gathering, and they are seeing like how they can disrupt the whole mining and fully focus on solo Bitcoin mining. So that will be happening next month. So once I get some update, I will also share with you guys. Now we are moving towards this research paper, which I was reading it. I found it really interesting because I do not see many research papers from India for especially for the Bitcoin mining. But here I can see that this was little interesting for me. I was reading this because they have done some testing internally and then they came up with this research paper. So let's see this. So this got published from Parul University and the author is Dhruv. I don't know him personally, but I was just reading the whole uh, Bitcoin because right now there is one thing you have to understand. The bigger players, because the shift is happening right now. The big takeaway, I would say, is the survival of the fittest. So the companies who is running efficient, those have renewable energy sources or the flexible power, they will only able to sustain in this Bitcoin mining ecosystem. And the hash rate will be keep moving from bigger players to the solo miner side. Just like in just one day, you see that 11% uh, drop has happened, and that increased the solo miner chances. If you're not aware, like Atlas Pool yesterday on 15th of June, I'm not sure, but let me show that update. So they have run, okay, let me cover that. Like they have run the rental party event yesterday, in that they have invited all the big solo minor players, Nice Hash, Brains, MRR, to point their rigs to the atlaspool.io for the occasion. So in the 15th June, means I'm just talking about the yesterday one, in that so many people have pumped the pool hash rate together to take the advantage of the lower difficulty, which has happened on 14th. So because the Atlas pool provides us solo mining facility, they are known for low latency endpoints. They have end nodes in India as well, in Mumbai or in Chennai as well, in many places in India, if I'm not wrong. And they are just taking 1.5% fee, which is less than the CK pool. And there are so many customization they are doing with Atlas pool. Right now, they are not supporting Stratum V2, but the work is already going on. I'm hoping soon they will also pivot and support Stratum V2, which we will be covering maybe in the next session. Now we will move back and discuss about this research paper. I will also share the link of this paper so you can also read it, understand a little bit more. But I will give you a brief idea and the essence what the author has done and was trying to explain using this research paper. So as I have mentioned that we have to focus more on efficiency, because see, for solo miner we are already efficient enough, but for bigger, and even if let us suppose we want to increase our efficiency, then in the part one, if you will read this, so okay, maybe I will read few details here, and then I will explain you in the notepad, then you will get a better understanding. So here they mention a little bit about the proof of work mechanism which we are using, and right now what are the subsidy which we are getting, and why they have done this, because you are aware of the Bitcoin halving. Like if you will see here, after halving, which is like in just approx 1 year and 302 days, in April 14, 2028, again the halving would happen, and this reward which you are getting will get half, and the new subsidy will become 1.563 BTC. So we want to increase the efficiency of the Bitcoin miner in such a way that we can able to sustain and operate during or after this Bitcoin halving as well. So the concept was, right now, all those minor firmware which is available at the moment, those are having few problems. One, they have divided it in the static problem. Another, they have divided into the dynamic problem. Like most home miners, let us suppose you guys might be using some miner from Canon. 99% of them you will be using their own firmware. They will always use one thing, which is static tuning. Okay. If you will go through the configuration, you may able to find it out. So what is static tuning? Static tuning is like once you stable, uh, okay, I will give you example. Like let us suppose I'm riding a bike. I first start at 10 kilometer or 10 kilometer per hour speed. Then I go to 20, 30, 40, 50, 60. That time I'm just trying to statically tune, like at what speed I can able to run my motorbike efficiently. Like let us suppose I'm comfortable running my motorbike during summer at 60 kilometer per hour, not more than that. So that is nothing but a static tuning. So I just keep my uh, bike at 60 kilometer per hour and it will be keep running at that time. The same thing is static tuning. So all those miners which you might be using, even if you are using drills, a BMM 101, or even if you are using Vitex, they use static tuning in the configuration. They find a stable voltage, so stable voltage and stable clock speed profile. So these are the two main thing. They will find it out. That's why once you turn on the miner, you see that it takes some time to stabilize the miner. Like first it will run slowly, then maybe faster. The fan speed will be faster. Then after, like if it is a big miner, it may take 10 to 15 years to stabilize. So the same thing is what is happening. The static tuning is happening. Okay, but think like this. There is a flaw here. Like if compare running a miner the same way I mentioned driving a bike, right? It may be different from different location across the country. Means if I'm driving a bike in India, I may not run at very high speed because I'm pretty aware of this road quality. I may not know when something would come in front of my bike. So maybe my speed would be little different. And in like if I'm driving a bike or a car in Switzerland or in Lugano, then I'm pretty aware because those are hilly area and the engine I don't need to bother about the engine overheat and all those things because the weather is pretty good there. Then maybe I will do the tuning accordingly, which is not happening in the all the firmware which is available right now because all the firmwares which have those have static tuning. So in this research paper, he has used actually machine learning which will fetch the data in a dynamic way. Means the software or the model will continuously alters the chip behavior every 60 seconds. I will give you a simple example. Okay. Maybe everyone might be using the laptop or the mobile phone. Sometimes it hangs, right? And if it hangs, what happens? Either the device will get turned off or restart. Think like this because in your mobile phone or the laptop, there is no dynamic tuning. Like if you will see the previous older mobile phone or the laptop or the PC, sometimes they got hang, they will restart, right? But if you will implement a dynamic tuning in such a way, okay, first thing is why this hang will happen. Maybe because of so much pressure on the chip. That would be the most common scenario. So instead of that, if we will dynamically alter the chip behavior. Let us suppose I have Intel i9 or i7. I will keep monitoring the chip behavior every 60 seconds based on the live condition because the temperature will keep changing. Even if in India, uh, within a day, the temperature will fluctuate. Like in the morning, it would be temperature would be something else. In the afternoon, it would be very hot. In the evening, at the night, it will be different. And we always want to run our miner 24/7. So this research is moving towards the dynamic tuning in that like every 60 seconds. So here they have mentioned more about, see, you can see the older ASIC hardware, which might be having 46 joule per terahash and all those things. But first thing is, see, the methodology what they have used. So they have taken the 6 month data set. They have collected it from the operation mining farm. So that's why I like this research paper, because this research paper is not something like I have written in a vague based on theory. They took the 6 months data from the operation mining farm. They collected all the reward rates because these things will keep fluctuating. And what they come out with, that first thing is dynamic tuning. So I will put it here as a note, dynamic tuning. That is the one thing which they are talking about. The second thing they are talking about how you will do the dynamic tuning, because that is also a very critical thing. In that case, you will uh, read the raw data from the ASIC. You will also, because you are running a machine learning model, right? In that, first thing is you will read the raw data from the ASIC. Second thing is uh, you will check the weather forecast. You will also do the reinforcement learning based on the previous data collection which they done. So they have collected the 6 months data set. Then they have prepared a data pre-processing pipeline, and then they deployed the model based on some input features. And in that, what they found out that if they will be implementing these things in such a way that they will be keep taking care of the chip temperature, the fan speed. Right now, the firmware are doing it statically, but they will be sensing these along with the weather broadcast, which is very easy to find it out. There are some open API calls which you can make and found the weather forecast detail. Then you can also find out the current temperature details based on the location. And you will forecast where the network difficulty and global pool stat will heading towards in next hour. Because if you know the temperature is going very bad in North America, and you also know that 35% of the hash rate is coming from North America, you can easily predict their drop is happening. So they will do all those calculation in the deep learning model. And based on that, if they feel the opportunity is there, they will do the clock. I mean, the clock or overclocking, I would say. And they will try to generate the optimal ROI from the hardware. And they have done some experiment, and what they were saying, like if we will doing this way, the total energy consumption can reduce by 22%, which is huge at the moment. I'm not sure how much is it is true. I just need to research more. But if what they are claiming, that they are claiming 70 to 25% improvement and 22%, like this is definitely they are doing a basic analysis based on that they are coming up with the number. But even if it is 17%, that is also very good. Like I can have a Raspberry Pi. One thing is I can deploy an AI or small SLM model, like not the large language or small ML model in a small Raspberry Pi or somewhere, or if I have uh, a customized open source firmware, I can also deploy it in the SoCs or the ASIC, which is already there in the miner. So there are two ways we can implement it. So the idea is right now you have to squeeze the efficiency from the miners. And right now there are so many developments are going on. Like in the next upcoming session, I will cover a research paper which I'm currently reading out. That research paper is from China. And right now, so much development is going on Bitcoin mining because the price is fluctuating a lot. They have to make the ASIC which very great joule per terahash efficiency. So leave about this 17.9 joule per terahash. Based on the latest silicon architecture, which I'm reading right now, they are trying to make the global efficiency to 17, which is right now 23.7. And those are for the home and small miners. I'm not talking about the industrial level big miners because the big miners may have bad efficiency. But people will keep running those because that time Bitcoin prices were very high and the rewards was very high. But right now, once things are shrinking, they have to move towards the miner, which is higher efficient enough. So yeah, that's all from my side.